UK inflation came in hotter, and despite the hotness of that inflation, the pound sterling is just up modestly 0.9%. The euro versus US dollar is up 0.46%. The dollar versus yen is down 0.55% to kickstart your day in the US session. I'll go through the technicals that are driving this currency pair, so let's get started. In the US, we see US stocks lower with the NASDAQ index down about 100 points. Over in the bond and the debt markets, we are seeing yields higher with the 10-year yield now up about 5 basis points. Looking at the euro versus US dollar, we are seeing a higher euro versus US dollar. In the process, the price moved away from what I had as this old floor right through here. You can see the floor holding up, hold. And then that floor became a ceiling right through here. The price did try to extend above it here and here just earlier this week. In trading yesterday, we came up to that floor or ceiling area, found willing sellers, moved down. But by the close, we were inching up, and in the new trading day, we continued that momentum to the upside away from what was this ceiling, now becoming a floor again. And that momentum took the price higher. We extended above the trend line right through here after stalling against it initially right here. And then we are now failing above that trend line and rotating a little bit down to the downside. We are also above the 50% retracement. That's of this move down from the April high to the low price that we saw in the month of May. 50% comes in at 1.13183. And that's going to be our close support. You can see how when the price moved down through here, we did dip below that level, but then rotated back to the upside. Let's look for that level to hold support. If the price holds against that level, the upside momentum can continue to explore with the 61.8% retracement of 1.13781, the next key target on the top side for the euro versus US dollar. But buyers are taking more control in this currency pair. Let's take a look at the dollar versus yen. And this currency pair made a break to the downside in trading yesterday, and that break failed right through here. Broke back below the 200 bar moving average on the 4-hour chart. Also, the 50% midpoint of the move up from the April low to the May high, that 50% midpoint came in at 1.44257, and you can see the 200 bar moving average came in just below that level. Looks like around the 19 or so level. And in Asian trading, we did break below that level with momentum finally, and then we saw a rotation back down toward this swing area through here between 143.57 and 144.02. We rotated back to the upside where we found willing sellers right under the 50% retracement, right near the 200 bar moving average of the 4-hour chart, and that's helped to push the price out further to the downside. The sellers are in control below this area right through here. If the price can stay below that level going forward, the bias remains more to the downside. This swing area through here has been broken on 1 and 2 separate occasions. The more recent, in the last hourly or bar, but getting below that level at 143.57 and staying below that level is going to be essential for the further downside momentum, which would then target the 61.8% retracement of 143.22. So sellers in control below 50%, below 200 bar moving average. We'll see if they can keep that momentum going. Finally, we'll take a look at the sterling versus US dollar. As mentioned, we did have the hotter CPI data, which now has the market pricing in only one cut between now and the end of the year. That moved to the upside off of that CPI data, extended to new highs. I'll go to the daily chart. Those new highs took the price above the 2024 high. That level came right here at 1.3433. We did move above it last month's trading to 1.3441, and this move to the upside is a bigger break above that level. We'll see, but as you can see, the price has rotated back down below that level. So there is some failure once again above that 2024 high. By the way, the new high price that we saw in trading here today was the highest level going back to February 2022. Let's go back to the hourly chart. This is a failure above those levels. This was a prior high against a 33 level, the 2024 high. This was a break above it that failed at 41, and we rotated back to the downside. We're seeing similar price action here, where we break above all those levels, come back down, retrace back up toward the 2024 high at the 33 level, and found willing sellers between that and the old high right here at 41, and we're seeing a rotation back to the downside. So we're not out of the woods as far as the pound versus US dollar. The idea is that with less easings, that the economy is going to get weaker as a result, and with all the trade tensions and so on and so forth, that could lead to a slower economy and leading to a lower pound, despite the higher inflation. We'll see how it all plays out, but there is a battle going on in the pound versus US dollar and staying below the old highs after a failure above them. So there you have it, a technical look at three of the major currency pairs to kickstart your trading day in the U.S. session. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.